EMA is very powerful if you use it correctly. There are a lot of uses, and then one of them is to confirm the trade entry. In this case, normally we need to use together with other setups. So here, the EMA will increase the probability of the trade. And the second, it serves as the support and resistance. Let's take a look at an example. In this chart, we can see there's a PP level here. This is the London Open. And then after the London Open, it goes up and goes down. So we can clearly see there is a value zone here because it's been in this zone quite a while. Here, here, and here. That's why this is a value zone. After the market goes down here, we can see that it's breaking this PP level a little bit, but not that much. So at this point, you wonder if the market is going up or going down, whether it's gonna be a range day or this gonna be a trend. Here is when we are going to use the EMA. First, you can see the EMA curve here. Basically, at this point, the market is under the EMA. This means it is a downtrend here. So for the downtrend, because the market is under the EMA, so when it goes up to test this EMA again, that means it's resistance. And also at the same time, we have the value zone as the resistance level as well. So combining the value zone here and also the EMA here, the market goes up to test both resistance, and then there's a good opportunity for you to trade downward to short. As you can see, the market pulls back, and then here comes a signal bar. And then after the signal bar closes, you want to trade downward. Once again, in this situation, the EMA must be used together with other setups. The second use of the EMA is to tell whether the pullback completes or not, because if the pullback completes, we are going to enter the market. That's the best opportunity and timing. And in this case, there's no other setup to help you. The only thing is EMA. And then if that's the case, you can tell whether the pullback is far enough, so you want to prepare for the entry. And then in this case, again, the EMA can serve as the support and resistance. Here's an example. So the market goes up with a strong lag here, so we're waiting for the pullback, and then we enter the market. However, based on the chart here, we can see there's a previous high here. When we draw the support or resistance level here, there's still a gap between the market and this level. So it's hard for us to tell whether the pullback completes, so it's timing for us to enter the market. If that's the case, we can use EMA. So there are three uses of EMA. The first one is to touch. The market just touched the EMA. So in this example, we can see the market pulls back here and then just touch the EMA here. So when it touches the EMA, we know, okay, the pullback has a higher probability to finish, so we can enter the market when we see a good signal bar. So basically, these two bull bars together, we can enter after this bull bar finishes. The second scenario for EMA is the cross. So basically, we see there's a downtrend here and the market pulls back. You can see these two bars here, the bull bar and the bear bar. Basically, they are crossing the EMA here. So this is also a good example that the pullback finishes, so we can enter the market after we see this bear bar here. The third scenario is penetrate. So basically the market goes up here and then pulls back. When you see this cross, and then you can put your entry at the top of this bull bar. However, the bull bar didn't trigger your entry order, so the market goes down with another bear bar. And then we have another bear bar, another bull bar. These two bars are penetrating these EMAs because they're below the EMA right now. When you see this penetration, so you can put your order when this bull bar comes up. So enter the market to go long. Whether you use EMA for touch, cross, or penetrate really depends on the number of periods you use for EMA, and also depends on your time frame. So you need to calibrate for the historical data to see which EMA and which time frame works the best for you.